Hello everyone, this is Juan Sarmiento and today is Thursday, December the 17th. I recorded a video early this morning live where all these trades were filled. Unfortunately, I didn't realize my microphone was not properly connected, so I'm repeating this video based on already filled trades. And I would tell you quickly that I have selected Microsoft, Disney, and UPS out of a group of 7, including others that did not fill my requirements. Microsoft in earnings beat by a wide margin. The volatility skew was favorable and the liquidity also favorable. The current IV percentile, my limit here is 15%, so 17 is not that bad. The chart of Microsoft will show you a diagonal, really a triangle, and it's a contracting triangle. Eventually this stock is going to move strongly up or strongly down, breaking above or below the previous high and previous low respectively. So I'm looking forward to a big move on Microsoft. So here's my trade. Let's go to the monitor, and I have entered 2 genies. Okay, so 2 means 2 short straddles, 4 long straddles. Okay, and that's the trade right here. Let's go to the Excel spreadsheet, and the cost is close to $7,000, which is well below. My account value is $93,000, so 7,000 is less than 10%. The trade has the longs here in March and the shorts in January the 29th. Okay, and that's already set and already filled, and you can see here that it got filled at noon, 34 minutes after noon. All right, that's good. Then after that, the stock lost a little value. The trade lost a little value, but okay. The next one up is Disney. The stock went up significantly after news that Disney is increasing the number of subscribers to their streaming service quite dramatically. And so originally the stock went up significantly, now it's moving sideways. So I entered the trade today, and it's moving sideways, but eventually it will break out up or down. I don't really care. Okay, let's go to the monitor tab, and here I have 3 lots, 3 short straddles and 6 long straddles. And my cost, let's look at the Excel spreadsheet, and you see that is 9,675, very close to 10% of my account. All right, and here again, the expirations are for the short is January 22nd, and the longs are expiring March the 19th. Again, the revenue, this news about the subscribers will certainly increase the revenue, even though it's not showing up in the earnings. The news about the earnings become obsolete. They lost a little bit of money, Disney did, but a lot less than expected. So that caused a bump in the stock, but now this news, it really moved it strongly into a new high territory. Okay, so that's that. That's my fill. And the last one is UPS. And UPS is all green except for the current IV percentile, which is 18%, very close. They beat by a wide margin by 22%. This is the expected earnings versus the actual earnings, because you can see that here. And so the expected is 22% below the actual, so that's great. The volatility skew, the difference, I calculate the average for the puts and the calls of the front month and compare it to the average of the puts and the calls of the back month, and the difference is 1.445, which is less than 3%. It's negative because it's unfavorable, but as long as this minus is not above -3, we are fine. And then the liquidity is 2.5. As long as the liquidity is not more than 3% difference between mid and natural, we are fine. Okay, so I'm going to describe these things in more detail in another video. Okay, so let's do this. Look at UPS. And here I'm using 2 lots. 2 short straddles, 4 long straddles. And let's say analyze that. And here's my trade. Okay. No difference right now. It's very close. And you can see here, when did I get that filled? At 12:36. All right. I also need to tell you that my target trade that I entered last week and never got filled. If I go back, let's say 7 days, you see that it got canceled repeatedly. And what I was trying to do was to roll it over. Roll over the shorts to January the 8th. From December the 11th to January the 8th. So that was last Friday. So it never got filled. So as a consequence, I ended up with 300 shares. Okay. So what did I do? I bought back the shares, but I sold the existing calls that I had expiring in January. Let's take a look at, and by the way, I didn't even realize that, so I got that done today. But if you have a real account and this happens, your broker will call you and say, hey, you have some short shares here that you need to close if you have a paper trading account or if you go above your margin. So what do? You simply buy them back. Buy back the shares, and because you're selling calls that you have in excess, it'll be fine. No big deal. So I did 3 like this. Okay, so that means I bought the 300 shares that I was short and I sold the January calls, strike price 145. And I'm left with 2 calls here and 3 short puts. 3 short puts expiring in January and 6 long puts. Okay, so all in all, this is what we have. It's close to delta neutrality, but is favorable to the long calls. And you can see target is 171. Let's take a look at a chart here. Okay, so I'm expecting this stock to go and test the highs, perhaps make a double top or break out. So the long calls are fine for me. If for whatever reason the stock falls significantly, well, we will catch that with my puts. All right, so this doesn't bother me in any way. It's there. If the stock rallies, we will be able to sell some of those calls as the stock goes up. Okay, so I'm going to leave that alone. And that's it. That's all I had for today. So thank you very much for joining me, and I'll see you next Thursday. Bye-bye.